Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a bang as the market is abuzz with news about Tesla and its upcoming Q1 earnings release on April 22nd. The electric vehicle maker has been making waves with its ambitious projects, including its transition into a robotics and artificial intelligence powerhouse. But will this vision translate into scalable, profitable businesses? That's the million-dollar question. As we take a closer look at Tesla's story, it's clear that the company is at a crossroads. On one hand, its core automotive segment revenue has been declining, with an 11% year-over-year drop in the fourth quarter of 2025. However, its energy generation, storage, and services areas have seen double-digit growth, and its Megapack and Powerwall products are gaining traction. On the other hand, Tesla's transition phase involves massive capital expenditure, with plans to invest over $20 billion in factories, AI infrastructure, and new product lines in 2026. This includes investments in battery production, AI chips, robotics, and manufacturing capacity. The big question is whether this level of spending will pressure margins in the near term. Analysts expect Tesla to report a 15.5% increase in Q1 revenue to $22.3 billion. With earnings jumping by 33.3% to $0.36 per share. However, the company has missed 3 consensus revenue and earnings estimates in the last 2 years, so it's anyone's guess how the market will react. Some analysts are predicting a target price of $600 for Tesla stock, which implies a 55% increase in the next 12 months. While this may seem like a stretch, it's not entirely impossible if Tesla delivers on all of its ambitious claims. After all, the company has never lacked vision or innovation. But as with any high-risk, high-reward investment, there are no guarantees. Tesla remains a polarizing stock, with some analysts recommending a strong buy and others advising a strong sell. As always, it's essential to do your own research and consider multiple perspectives before making any investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of tech and finance, where a significant investment has been made by Amazon in AI startup Anthropic. This $5 billion investment brings Amazon's total commitment to $13 billion, with the possibility of an additional $20 billion if certain milestones are met. The funds will be used by Anthropic to purchase AI chips from Amazon, specifically designed for training and running its popular Claude AI models. This deal highlights the growing demand for AI computing resources and the strategic partnerships being formed to meet this demand. Anthropic has experienced rapid growth in paid subscriptions for Claude-related services, which has put a strain on its existing infrastructure. The investment from Amazon will provide Anthropic with the necessary compute capacity to support its growth, including access to Amazon's Graviton chips and Trainium 2 through Trainium 4 chips. It's worth noting that this agreement is an example of circular financing, where tech companies invest in AI startups, which then use those funds to purchase products or services from the original investors. In this case, Amazon is providing Anthropic with the means to buy more AI chips and cloud computing resources from Amazon itself. This type of arrangement can raise questions about the dynamics of these partnerships and the potential risks and benefits involved. Anthropic has also received investments from other major tech companies, including Google, NVIDIA, and Microsoft, and has committed to purchasing AI chips and cloud services from these companies as part of its multi-cloud strategy. As the AI landscape continues to evolve, it will be interesting to see how these partnerships shape the industry and impact the development of AI technologies. The implications of this investment are far-reaching, with potential consequences for the broader tech industry and the future of AI development. As we consider the risks and opportunities associated with these types of investments, it's essential to approach the topic with a nuanced perspective, recognizing both the benefits of strategic partnerships and the potential drawbacks of circular financing arrangements. Welcome back to the Riskwiser Zone. Today, we're going to dive into a fascinating story about Liberty Defense, a company that provides multi-technology security solutions for concealed weapons detection. Their product, HEX-Wave, uses active 3D radar imaging technology to detect both metallic and non-metallic weapons in high-volume foot traffic areas. Now, you might be wondering what this has to do with investing. Well, Liberty Defense recently announced a proposed securities offering, which could have significant implications for the company's future growth and development. The offering is expected to raise capital that will be used to further develop their technology and expand their operations. As an investor, it's essential to consider the potential risks and rewards associated with this type of investment. On one hand, Liberty Defense's technology has the potential to revolutionize the security industry and provide a significant return on investment. On the other hand, there are always uncertainties and risks involved with investing in emerging technologies. It's also worth noting that Liberty Defense has secured exclusive licenses from prestigious institutions like MIT, which could give them a competitive edge in the market. However, the company still faces challenges in terms of regulatory approvals, market competition, and the ability to execute their business plan effectively. As we always say on the Riskwiser Zone, it's crucial to do your own research, assess the risks, and consider multiple perspectives before making any investment decisions. Liberty Defense's story is a great example of the complexities and nuances involved in investing in innovative technologies. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.